All right, good morning. It is 8:11 a.m. Central Time on Thursday, August 17th, 2023, and let's jump right into the trade setup planning exercise for today. Now, the challenge with today is that the markets have gotten overextended and oversold into some pretty decent areas of support where we saw responsive buyers step in the overnight session, especially NQ, I think is quite overextended, and that could make for a trickier intraday read. All that being said, I still expect sellers to be active at the resistance areas above. Our short-term bias continues to be neutral bearish, and anytime our short-term bias is neutral bearish, the implication is that we are still looking for shorting opportunities, but we need to be a bit more mindful of the intraday momentum situation. And if we are seeing sustained upside momentum, then we need to counter that by securing better trade location. So today, I think, is going to call for a bit more caution, even on the short side. That being said, it would not surprise me to see the S&P take out the overnight low for a test of 43.97.5 to 44.07.5, maybe even a bit lower, and then perhaps larger time frame buyers step in and we get a larger and more momentum based upside move. So, with that in mind, I'm still going to be looking for shorting opportunities, but I'm going to have to be assessing the real time situation. And if we are noticing a bit more strength in real time, or we are seeing sustained upside momentum, I'm not necessarily going to chase that momentum and try to find a long at an aggressive spot. I think I'll simply wait for the market to get to a better price to short, because the probability of a very high momentum upside move is still relatively low. Given the weakness we've seen over the last few days, even if the market is going to stabilize and eventually head higher, I think we will balance at lower prices. We will consolidate and digest the recent multi-day balance breakdown, and then perhaps we can make our way back up into the 44.85 high volume node and beyond. So for today, my base scenario and expectation is for ES to hold below yesterday's RTH high, or at least hold below the 44.63 quarter to 71 quarter area. So as long as we don't take that zone out, I think we can consolidate at lower prices. So with that in mind, I am going to be interested in finding shorts at the initial resistance zone, 49.75 to 59.75, as well as 63 quarter to 71 quarter. I am going to make a variation of the 63 quarter to 71 quarter area and set my stop to just beyond the overnight high from yesterday, which was 67 quarter. So we'll create a slightly more aggressive entry here. So that'll allow us to get a better price and better reward to risk. So our overnight high on Wednesday was 67 quarter, so I'm going to set the stop to 68 quarter, and that would allow me to enter a bit earlier. As far as our targets go, I think if we reach 63 quarter to 71 quarter, the probability of a larger downside move would be reduced, and the targets I think will need to be a little bit more mild. Now the good thing is that the default targets here being 42.75 and 37.5, those are pretty safe bets. I think if we fail at 63 quarter to 71 quarter, we could quite easily see a move down into 42.75 and 37.5, and it wouldn't surprise me to see the market head even a bit lower than that, but these are pretty conservative targets in my opinion. If we fail at initial resistance, I think that's when we could get a move down towards initial support. So in this case, I'm going to set the high probability target to just above the overnight VPOC and kind of mini breakout area. So I'll set this to 32. And I am going to set the final in this scenario to essentially the gap fill. Now, I think I may adjust this in the moment because timing is going to matter here. If the market pushes up into initial resistance during the first hour, I'm going to have more leeway with the targets and I can look for bigger targets. But if the first hour range gets established at lower prices and then we break out and we head higher, well, in that case, the low of day may be in if the market's breaking above the first hour high. So that's where I will need to make adjustments to these targets. But for now, I think that this is a fairly safe bet. It wouldn't surprise me to see the market go even lower than 1975. So for now, we're going to use this 53.5, 60.75, and yeah, that should be fine. On pre-market resistance, this is the more aggressive one. This is the most aggressive resistance area, and I think that the ideal entry may have already taken place here. I think that in the pre-market session, it wouldn't have been a bad idea to short the upper part of this zone with your stop behind 42.75. So essentially would be leaning on this zone and trying to find an entry. And you can see that if we enter around the upper area of pre-market resistance, 36.5 or so, stop goes behind 42.75. That actually would have been, I think, an okay entry. But off the open, I think pre-market resistance may be a bit too aggressive as a spot to short, at least purely based on location. Pre-market support and resistance tend to be the more aggressive areas and more prone to breaking. So I'm not just going to short pre-market resistance purely as a location play because it's not really ideal trade location. Now, if in the moment we develop an opening range around pre-market resistance or a little bit above it, and then we break down below that opening range and the entry can still be around 37 or so or 35 or so, then that would be a real-time market read, which could then trigger a short targeting a move down into the overnight low and even beyond into 07.5. So I think if we fail below 47, then there would be a higher probability for the market to test the middle to back of initial support, which is 09.5 to 1975, and we could even take that area out. So I think that if we are going to put in a break below the overnight low, then we should not even really breach initial resistance or even reach initial resistance. I think in that situation we'll kind of hold below the initial resistance zone. So if we fail at the lower resistance areas, there will be a higher probability of reaching 97.5 to 07.5. Now on the long side, I would be looking to buy over extensions into support. So initial support, I'm not really as excited about. I think that is a riskier area now because of the buying that we've seen off that zone in the overnight session. The fact that we've already seen a bounce off of 09.75 all the way back up into the 36.37 area takes away from that zone because that high probability response has already happened. And now if we go down there, the market would essentially be breaking this overnight trend in order to go down there, and that could trigger some liquidation, and we could test for stops behind the overnight low, push down into the next zone, and that is a spot where buyers could still be active. And in order for the long off of 43.97.5 to 44.07.5 to work, we would essentially need to see a false breakdown pattern on the day time frame, right? So we would need to see a push below, followed by a swift move back above, perhaps some consolidation, above the zone, and then a move higher. Depending on how the market gets there, we could even get kind of an instant reaction that could take the market back up into the 1920 area, and then perhaps we balance. So we don't really want to over predict what's going to happen there, but definitely open to buying the 43.97.5 to 44.07.5 zone, especially if the market is kind of flushed into it and we've kind of cleared out some stops around that area. I don't think I'm going to take that trade with a resting order. I will probably wait and see how the market approaches that zone. Because if we balance at initial support and then we break down, then I'm going to have to be a little bit more careful and allow that intraday balance breakdown pattern to perhaps hit the 50% extension of the first hour range, or at least kind of exhaust that intraday liquidation and stop run and momentum before I fade. But I am going to be looking to buy the overextension and exhaustions into support areas below, and the lower the market pushes, the higher the odds of buyers stepping in. Below 43.97.5, the next larger time frame support is down at 43.67.5 to 75.5. That would be a very good spot to consider buying the market. I'm going to set up two trades over here. I'm going to lean on the zone, and I'm also going to lean on the 60.75 high volume node. Put my stop at 59.75. So the nice thing here is that I can use the daisy chain option to trade this entire area, and 60.75 marks a range extreme. So the likelihood of the market taking out 60.75, especially given the overall context of ES being quite oversold and NASDAQ being oversold into support, the probability of the market taking this out is fairly low. So if we do push down into 6.75, I would anticipate a bounce back up into the overnight low. So we're going to set this to 8.75, and I would still expect the target to be 97.5. So these are still fairly mild targets here. So 74 entry. I think what I'm going to do actually in this case is I'm going to get a little more aggressive on the entry here. So I'll take it at 68.75, and I'm going to just push this stop up to 68.5. So we're going to daisy chain. That will allow me to front run the 75.5 zone, and I'm going to test one other variation to see if I can just simplify this entire idea here. So I just want to see if I just risk 2R on the trade and just put my stop down at 59.75, if that just gives me kind of overall better risk reward or not, just to see. Okay, so 2.7, and I'm risking 2. Here I'm getting 3, and I'm risking 1R, and the stop may not even trigger. So in this situation, it will not be worthwhile to use 2R of risk. Rather, it's better just to take the trade at 75.75, leave the stop here, and daisy chain the entire setup. So if the market reaches this area, 75.75 would be a resting order buy to get long, and 68.75 would also need to be submitted as a resting order. Worst case scenario, I lose 2R on the idea. The middle of the road scenario, I get stopped out on the first one. I make 2 to 3 on the next setup here, and that way overall I'm still ahead. And best case scenario would be that my initial zone here, 67.5 to 75.5 holds, the 68.5 stop holds, and I just end up getting 3R, maybe more, by risking just one. So ideally, that's what happens. I will set up longs at these other areas as well. And again, whether I trade those will depend on the real-time situation. But the lower the market pushes, the more conservative I'm going to be with my targets. And if the market finds buyers at 43.97.5 to 44.07.5, that's where I can be more aggressive with my targets. So if we find buyers around 4,400, then bouncing back to the 44.30 area would not take much. So if the low of day ends up being 43.98 or 99, and then we bounce back up, then we could retrace back up towards the overnight high. That wouldn't be out of the question. So 04 quarter, we're going to set this up as a daisy chain type setup since we are exercising caution there. And in this case, we'll also use 30. And if initial support holds, then I think we can probably get to 47. So 1075 and 04 quarter. So these are potential longs, but will require a real-time market read. And on the upside, the shorts that we have set up are going to be around, the conservative shorts are going to start at 53.5. And this one I'm going to move to 64.5 because I don't want to take the entry above yesterday's RTH high. And we can probably change the target to 31 or something. I don't think we need to be that conservative. We can probably still get a move down towards so we'll set this to 36.75, 36.75. So 2.5 hour potential and 3 hour potential if we take the aggressive stop. And in the event that we do head to 76 to 85, that would be a resting order short. Okay, guys, we're going to wrap up over here. It is 8:28 a.m. Central Time, so the market opens in just about a minute or so here. Hope you guys found this exercise to be helpful. If you did, then please like and share this video, and we will connect on the next one. Good luck and good trading today.